Hi, this is Matt from Matt Strats, and this is your economic/market update for today, Wednesday, September 13th. I'm sorry. I can't even keep a straight face as I try to mimic my best content days. I hope you had an absolutely phenomenal day. We have a lot to talk about. I want to get into what happened in the market today because of the inflation report, all that good CPI jazz. I want to talk about how Mila Kunis, the actress, is now being sued by the SEC, and I want to get into a little bit of the fallout of this whole Vegas hack thing because the whole thing is actually pretty crazy, and maybe, just maybe, I'm gonna brag about the trades I absolutely crushed today. If you haven't already, if you want to become a degenerate of the Goonie community, don't forget to like, don't forget to subscribe. With that being said, let's rock. So by the time the stock market bell went dingity ding 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 to close out the day, the market went a little bit up, a little bit down, and overall it was a mixed bag result. The overall market, the S&P 500, was up 0.12%, and the tech sector did a little bit better, up 0.38%. Amazon was clearly an outperformer, up 2.5%. And then we had Netflix that, for whatever reason, got yeeted off a cliff, dropped $22, as in 5%. If you want a larger look at the overall market, here's a heat map of the S&P 500. Yeah, some tech did all right, but we're clearly seeing some weakness in the real estate and energy sector. Now, if you ask me, I really thought today overall was going to be a bit more wild because we did get that inflation report. And yes, I'll be breaking that down and I'll talk about some of the predictions from yesterday. But overall, I think we could all say today was a little bit choppy, but really muted. And remember, the market likes to consolidate and then expand. Consolidation, expansion. So I think we're right now in a phase where we recently had an expansion to the upside, a little bit to the downside, and now we're consolidating, just waiting for that next major move. And I'll obviously be pointing out the levels at the end of this video where I'm looking either for a major breakout or a major breakdown. I'm not necessarily bullish bias or bearish bias. Yes, we'll be going into the seasonality, but hey, I'll take whatever the trend is gonna be. Now, before we get into all of that, I wanna talk about this because I found it particularly irksome. U.S. Senator Warren calls to investigate Elon Musk. While serving 10 years in Congress with an annual salary of $193,000, she managed to increase her net worth by $73 million. Is anyone else out there tired of the fact that we have very rich people calling out ultra rich people, and then yet they're somehow cosplaying as a Robin Hood-esque figure of fighting for you, fighting for me, when in reality they're just trying to get more votes so they continue doing whatever they were doing to increase their own bank account? Maybe it's just me, maybe I'm not old enough, maybe I'm not mature enough, maybe I'm just not reading the writing on the wall, but this is pretty evident, right? Like, we all know that she's not on the side of the common man. She's made $73 million, and yet she's going to take up the mantle for fighting against capitalism? I don't know. Just a little food for thought. But talk about my journey to becoming worth $73 million on the stream today. If you missed it, check it out. I'm streaming Monday to Friday, 9 a.m. to 11 a.m. and sometimes a little after because I lose track of time. Well, I got two signals today that relate to 0 DTE trades, and officially on the week, we are now 6 for 6. We had 2 call outs on Monday, 2 call outs on Tuesday, and now 2 call outs on Wednesday, going 6 for 6, batting 100, and I like to see it. So right here, 0 DTE trade on the SPY. It was a SPY call spread, needed it below 448. Obviously, if you check out the market, we were successfully below 448 at close. And then the other one was on the Qs. Once again, another 0 DTE call credit spread, needed it below 375. Bada bing, bada boom. We closed about 40 cents below that. So crushing it thus far on the week, 6 for 6. If you are at all interested in getting potentially these 0 DTE signals, now if you want to take them, great. If you think they're horrible and you want to fade them and do the opposite, have at it. Or if you just want to look at them and talk a little bit about the math and statistics behind it, hey, have at it. macros.locals.com. It is in the description of the video. With all that being said, let's talk about why I felt a bit more comfortable doing call credit spreads, which could be viewed to be a little bit more of a bearish bet, maybe a neutral bet, but definitely not a bullish bet. It all came down to what we got at 8:30 8:30 a.m. ET. Today, August core inflation, excluding food and energy, rose 0.3%, hotter than expected. Now, if you want the exact numbers, before this was all reported, here were the expectations. So year over year CPI, they were looking for 3.6%. Month over month, they were looking at 0.6%. And month over month, when you take out food and energy, they were looking for 0.2. And that's where it came in a little bit hot. The core CPI came in at 0.3. So inflation higher than expected. Obviously, the market was slightly bearish. In all reality, we had more of a neutral day. But my bearish bias was more so because when inflation comes in hot, there's a better chance of that forcing the Fed to continue their hawkish monetary policy, as in either keeping interest rates high or pushing them even higher to push downward on demand. But let's recap some of the key points here. Energy prices fed much of gain, rising 5.6% on the month, an increase that included a 10.6% surge in gasoline. The jump in headline inflation hit worker paychecks. Real average hourly earnings declined 0.5% for the month. So that's the headline information, but the real key takeaway you need from all of this is the fact that yes, inflation is still high, and unfortunately, it's coming in higher than predicted. Fed on alert for one more hike after disappointing inflation. So if you watch my update yesterday, there was basically three scenarios. We came in super hot, which would have forced another Fed rate hike in September, Wednesday, September 20th. That didn't happen. The other option was we saw certain subsectors, really the sticky sectors, I'm talking about shelter, I'm talking about services, coming down even more than expected, which would actually mean that maybe we're done with rate hikes. And in reality, we hit what was predicted to be the most likely case of somewhere pretty close to neutral. Granted, it was a little bit hotter than we wanted to see, but we're basically at the point where we know statistically 97% chance when we get to that Wednesday, September 20th meeting, no rate hike. But then when we get to the November 1st meeting, well, at this point, there's at least a 40% chance some form of a rate hike. So a little bit less than 50-50. So it's not a guarantee, but the odds are looking pretty high for it. Now, obviously, this isn't going to be a guarantee for the November one because between now and then we have retail sales, unemployment reports, PC. There's many other reports coming out between now and the November meeting that could change. But I think it's pretty safe to say at this moment in time, when we get to that September meeting, the end of September, roughly a week away from now, depending on when you're watching this video, that we're probably not going to be getting a rate hike. But once again, I just want you to know we have not beaten inflation. Inflation is still clearly higher than we want. I mean, it just clocked in at 3.7%. We're supposed to be at 2%. So we're almost double where we should be. Inflation is obviously a very, very real problem that we're still currently battling. This will be an important video for later. I should probably make a standalone video on it. The moment we announce that we're just keeping our rates flat, or maybe even worse, and I'm going to explain this in a second, we decide to cut rates, that is not going to be a moment to buy. I could provide the statistics and the numbers in a different video, but historically, when they announce a rate cut, there's still serious drawdowns in the overall market. So once again, I'll make a whole standalone video on that a bit later. Moving on, Mila Kunis backed Stoner Cat NFT animated series fined $1 million by SEC, and this is now being reported by CNBC, Crypto World. Here we have another article. Mila Kunis backed web series faces SEC enforcement action for unregistered NFT offerings. The production company behind Stoner Cats, still a little curious on how she came up with the name, encourage investors to buy and trade royalty-yielding NFTs, tying the collectibles to the success of its Hollywood-backed web series, the SEC said. So basically just saying, hey, it's a security, and that's the whole thing right now with the SEC and the crypto world of what is or isn't a security. Now, I would guess that her name, her money, all that should probably pay it off and go. But I still think this is, in my opinion, an overreach from the SEC because they're willy-nilly declaring everything as security. And the people who decide to really take it to the mat in terms of the court cases are ending up embarrassing the SEC. So I'm curious to see how this will all play out, but just interesting to see, obviously, a household name from that 70s show, Mila Kunis, tied up with the SEC and crypto, and right now actually facing a pretty sizable fine. Speaking of sizable fines, check this out. Virtu, the world's second largest market maker, goes Citadel, then Virtu, also just got nailed by the SEC. So this is from Dave Lauer. He did a great breakdown of what's going on. But the main thing you need to know here is it had to deal with information and the lack of barriers of information. So Virtu is a market maker, but it's also a prop firm. And then all of a sudden information was going from what was being traded and the market makers were seeing it. And it was this whole thing. And if I had to guess how this is going to play out, they're going to fire whoever's in charge of compliance. They're going to hire a new person and they're going to be like, yep, nope, our new compliance is absolutely airtight. And then you're going to fast forward X amount of time and then it's going to happen again. And I would assume whatever the fine is for this is probably less money than they actually made off the practice. I'm just throwing out wild guesses, but it seems like we've seen this story before. So if you want to dive a bit more into it yourself, obviously I'll have this all linked below. But yes, the world's second largest market maker, aka Virtu, just getting hit by the SEC, I guess similar to what's going on with Mila Kunis. Another streak of bad luck. I don't know if you guys have seen what's going on in the world of hacks in Vegas, but it's insane. MGM Resorts says cyber attack could have material effect on company. So yes, obviously I do find interest in this just because it's a wild story, but in terms of trading and investing, yeah, we might want to be looking at some of these Vegas casino stocks because they might be getting hit from this. MGM Resorts on Wednesday said that a cyber incident that had significantly disrupted properties across the US for the past 3 days represents a material risk to the company, and it gets even more wild. At the same time, the major credit rating agency Moody's warned that the cyber attack could negatively affect MGM's credit rating, saying the attack highlighted key risks within the company. The company's corporate email, restaurant reservation, and hotel booking systems remain offline as a result of the attack, as do digital room keys, but it didn't stop at MGM. Caesars Entertainment paid millions to hackers in recent attack. So as in it worked for the hackers, and we actually have some information on who the hacking group is. Caesars Entertainment paid tens of millions of dollars to hackers who broke into the company's systems in recent weeks and threatened to release the company's data. Caesars is expected to disclose the cyber attack in a regulatory filing imminently. The disclosure of the alleged Caesars breach comes as another Las Vegas entertainment giant, MGM, announced it was hacked earlier this week. The group behind the attack is known as Scattered Spider, or UNC 3944. Its members are skilled at social engineering in order to gain access to large corporate networks. According to cybersecurity expert, in the case of Caesars, the hackers first breached an outside IT vendor before gaining access to the company's network. Overall, this is crazy. I have the sneaky suspicion that there's much more to the story than what's being disclosed right now. But in terms of investment and trading, obviously, these ticker symbols are taking a hit. Maybe they rebound, or maybe something else is found out by the public that makes it go a little bit lower. So at least for me, they've earned their place, like a place on my watch list, because I think there's going to be volatility and maybe either a trading or an investment opportunity. So I just wanted to bring to light the story just in case you haven't heard of it. And then obviously on top of that, I'm just going to be checking out what's going on. Now let's change our, tune a little bit to what to look forward to tomorrow, Thursday, because I'm still expecting some overall volatility in the market. Now, first, individually, just for an individual equity name, ARM IPO. What to know about the circuit designer and its market debut? The IPO season is here. The IPO market is starting to heat up. Obviously, ARM is going to make its public debut most likely tomorrow, Thursday, but we also know that Birkenstocks, they're filing for an IPO. We know Instacart is. It's just the IPO market is clearly heating up, and a lot of people are excited about ARM. So ARM's in the world of semiconductors. Think about the processing chips. Think about NVIDIA, Intel, Qualcomm, AMD. It's in that world, and it should actually be a pretty impressive one. Many people haven't heard of ARM, but nearly everyone uses its products, and now investors will be able to get a piece of the company through its initial public offering this week. The UK-based company designs parts of chips inside nearly all of the world's smartphones, as well as Apple's computer, Amazon's data centers, and a growing share of cars. So in more detail, here's what you need to know about the ARM IPO. ARM and its underwriters are set to price the IPO on Wednesday following its week-long roadshow pitch to investors. Its American depository shares are expected to start trading on Thursday on the Nasdaq under the symbol ARM. The company is seeking a valuation of at least $52 billion, with shares priced between 47 and 51 each. Seeing how this plays out, most likely it's going to hit the public markets even higher. People like you and me, average folk, we're not going to get in at these prices. I also want to let you know that I will be covering it. Feel free to tune into the stream, tune into the Matt Kohrs show to see it make its public debut. I just wanted to let you know I'm not trading it. I'm not investing it. I've just been burned on IPOs way too many times. This is no knock against ARM. It's just I've learned that the volatility of an IPO isn't necessarily the way I like to trade and invest, but this will be going down on Thursday. So at least some excitement to see there in terms of an individual equity name, but also the overall market. We're going to be starting the stream early because at 8:30, an hour before the market opens, we're going to be getting retail sales. We're going to get the PPI report, and we're going to have a couple updates from our friends across the pond, the European Central Bank. That's the equivalent of our Fed. It's their central bank over there. So starting the stream early, we obviously have some key macro reports tomorrow. So should be a fun day. And I also want you to know in terms of seasonality that for Thursday, September 14th, the bulls have won this day 54% of the time. The profit factor is just above 1, so the seasonality is clearly neutral. So because of seasonality, even though September, the first 2/3, the first 3/4 of it do favor the bulls, this particular day is a net neutral day. So in reality, what I'll be looking for is more of breakouts or breakdowns. On the screen right now is the daily chart for the S&P 500 tracked by the SPY ETF. And clearly we had expansion up, we had expansion down, a little bit range bound right now. I'm either waiting for the market to basically break above 448, 449, break above and hold and look to be bullish, or I'm looking for this breakdown below 445 and obviously hold below that to see a test of maybe sub 443. For me, as I said before, I'm not necessarily leaning bullish or bearish. I'm just waiting for the price action to tell me which direction I should be playing in. Now, obviously, if you want more of a real-time update, tune into that live show. And also, if you're interested in some of those zero DTE callouts, check it out, mattkohrs.locals.com. All that stuff is in the description of the video. Same thing with if you're interested more in the SEC filing against Virtu, I'll make sure that's also in the description of the video. Obviously, if you like these types of daily updates, let me know in a comment below. Don't forget to like, don't forget to subscribe. I appreciate you checking in on this video. I appreciate all your time. I'll catch you in the next one. Have a beautiful day.